All right, so last week, Jim Thorne said hyperscaler CapEx spending is going to be much higher than what Wall Street is calling for. In fact, he says it's just part of the AI supercycle. And of course, the street's looking at $1 trillion. He says, forget about it. Try $4 trillion. By the way, my next guest has been saying the same thing except for a lot longer time. I want to bring in now Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. Jim, I think the crazy target upgrades this morning, from 500 to 1600, some of these, it just feels like, what you've been saying for a long time, but the street, and I've mentioned this already in the show, has sort of gotten it all wrong. And now people are catching up to the idea that this is going to be what you call a decade-long cycle.
Yeah, I mean, Charles, you gotta think about this, and the hard part is you've got to stay in the market and wait for these moves. You just can't time them.
Right.
But look, this is not going to be your normal 3-year cycle. This is we're gonna roll in the 1940s, the 1950s, and the 1990s all into one. And once the street recognizes that this is not a normal 3-year cycle, then you can sit there and look. Like, for example, with Micron, look, in 29 they're going to make $150. What multiple do you put on that in earnings, right? And right now it's still really cheap. NVIDIA is still really cheap. And so the street is wrong. Charles, their models are wrong. The gating factor for me is silicon. As long as fabs don't increase the amount of silicon and wafers that are going to come out, we're going to have a longer cycle. And it's going to be more important for the earnings. It's going to be more important for the S&P 500 and the NASDAQ. So just ignore the haters. We've got a long way to go and keep invested.
So you've got a target for the S&P 14,000 by 2029. And I had the formula, AI, what's happening with the administration, and some other things, all sort of together. This is your formula that takes us here.
Well, it's real simple, right? Earnings growth is a function of nominal GDP. And the president is going to run the economy hot. And so if you just assume that nominal GDP grows at 7%, right? So there's I think Atlanta GDP right now is 4.5%. Kevin Warsh is not going to raise rates to squash growth. And let's just assume 2.5% inflation. You get 7% nominal GDP, and then earnings are a multiple of that. If earnings grow at 10 to 12%, and you put a 25 multiple on the S&P, now Charles, that's up from 22. And yes, Charles, that's not the 49 that we had in 1999. You get big numbers.
Right.
And that's not even including dividend reinvestment.
And by the way, to your point, we've already had successive quarters of double-digit earnings gains that have blown all Wall Street estimates out of the water. And now if you look at even the conservative estimates are all saying double digits for a while. So again, AI, America first, productivity boom, and then of course the peace dividend that's going to come out of this Iran conflict, that gives us this new secular bull market you're talking about. Stay focused on semis, though. That's an area that you want people to remain focused on.
Charles, this is just like the 90s, right? Hardware over software. Yep. And remember, you're going to have these periods of times where the crappy names just fly and they're 10 baggers all over the place. Quality is going to basically lead the day. And Charles, I know SpaceX is coming, and look at orbital compute is going to be massive, and space is going to be something you need to get into your portfolio.
So I think of the 28.5 trillion, something like 22 or 26, the biggest chunk of that, to your point, comes from compute.
It does.
Yeah.
And so don't overthink it. Don't get traded out by the doomers. We've got a long way to go. And Charles, I can get you to 16,000 early next decade on conservative back of the envelope numbers. So this is going to be a generational trade, Charles, that's going to make the 1990 trade. It's going to morph the 1990s trade. We got such a long way to go.
Jim, if I had a tambourine, I'd be playing it with you right now, my man. We're singing from the same hymn sheet. But I also want to point out for the audience, you also say, hey, the policy-driven boom will also help energy, defense, and infrastructure. So there's also areas that you want to make sure you have some exposure.
Yes. I mean, that goes in, think of the 1940s and the 1950s. The United States is going to retool. What is happening in the Middle East now with the president trying to expand the Abraham's Accord? This is monumental. This is going to lead to a peace dividend, and, energy, defense, infrastructure, America first. This is going to be a wonderful time, Charles, and we can't allow our clients or our viewers to miss it because of the doomers.
Yeah. Well, I'm doing my part every day, Jim. You know that, man. Because I believe 100%. I love where we are, and I think this is a generational opportunity. I'm glad I have your voice in this. Thanks a lot, Jim. Appreciate it.
Thanks, Charles.